Cryptocurrencies dropping at this hour on, you guessed it, recession fears. Bitcoin, look at this, 19,597, down 2.5%. It is below that key 20,000 level that it seemed to be holding the past couple of days. And it certainly wiped out last week's high of just about 22,000. Ethereum and Litecoin both down. Well, Ethereum's down almost 5%. So the drama completely intensifies. Do you remember Three Arrows Capital? That's the crypto hedge fund. They filed for bankruptcy just a few days ago, July 1st, after the overall crypto crash and the Terra USD stablecoin implosion. It forced its $10 billion in assets into liquidation. Well, the company's founders, Su Zhu and Kyle Davies, appeared to be on the run. Creditors said their whereabouts are not known. They were set to be in court for a liquidation hearing today, but one of them, they didn't show up, but one of them, Su Zhu, did reemerge, well, on Twitter, and he accused the liquidators of baiting. There's his tweet. So this is a lot to digest. It's a lot for the nerves, especially if you're an investor. And it may make future crypto investors just stay away. With that, we bring in Eco CEO Andy Bromberg. This is a Fox Business exclusive. And Andy, I want your thoughts right now. Is this the time to be investing in cryptocurrencies? This is a wild story that the founders of the hedge fund are MIA.
It's a wild story. And I do think the Three Arrows Capital situation is not specific to crypto, really. In a lot of ways, it actually looks like the Archegos Capital with Bill Hwang's situation just a few months ago, where a massive hedge fund was massively over-leveraged, had all sorts of issues with counterparties, and blew up. And that's something that can happen in crypto. It can happen in equities, as we saw with Archegos. And that's something that's real. And investing in the crypto markets is a risky endeavor. And we're still early in this ecosystem. And I think what we'll see over and over again is that early technologies are volatile. And so would I tell someone to invest in crypto? No, not necessarily. It's a personal financial decision. But what I would say is that we're hearing a lot from people right now that they are wanting more transparency into their money. That people are feeling the pain of money right now, whether that's inflation prints at 8.6% or it's fees hitting them from every direction. And what people want is transparency in their money. Crypto can sometimes provide that. So for certain people, it is an interesting and good use case to consider.
But I thought Bitcoin was the inflation hedge. Not the case.
It may be eventually. I think in the early days, it will function more like a risk-on asset, like a tech stock. And I think that's okay. In the long run, Bitcoin does seek to be an independent inflation hedge and store of value. But I don't think it has to be that in the early days. In the early days, it is still a relatively speculative asset. And that's something that's fine. What we think about a lot is that crypto is an asset class that you can invest in. Certainly, you can trade it. But crypto is also a technology. It's a technology that can power all sorts of applications that benefit end users in ways other than just by trading on the asset. And so while there's a lot of focus paid to the trading part of crypto and the ability to make and lose money speculating in these markets, there's also the reality of products like Eco that are being built with this technology in mind to provide real services to real end users and real world use cases.
So essentially you need a strong stomach and a belief that in the future this technology is here to stay. But I mean, Bitcoin, Ether, maybe a few other stronger players emerge here. What happens to the rest of the smaller coins? What does it say about them?
I think the vast majority of small crypto assets will go to zero or be forgotten about. And I think that's the nature of anything early stage. I saw this previously. I ran a company called CoinList, which facilitated digital asset projects launching. And we saw thousands of projects apply to work with CoinList. We only ended up working with a couple dozen of them because the vast majority of them just aren't good. And that's the reality of any new gold rush where people see an opportunity. But that said, just as we saw in the dot-com bubble in 2000, great companies, great projects will emerge. It won't be most of them, but it will be some, and those will define the next generation of financial technology.
You brought up the dot-com crisis, and I'm thinking of these remarks from the Rockefeller chair, Ruchir Sharma, and he kept paralleling Bitcoin to Amazon in the early 90s. And how it dropped like 90%, and then it had this amazing comeback, and it's a verb, we Amazon everything these days. I mean, do you see that happening with Bitcoin specifically?
I do think so. Obviously a different use case, but I do believe that Bitcoin will be successful as a long-term store of value, something that can replace certain use cases of things like gold or other ways that people store value, whether that's art or land or anything else. Obviously, there's other use cases for many of those assets, but in part, it is about storing value, and that's something that I think Bitcoin is well positioned to do. It has a lot of momentum, and while it's not risk off yet, I think it has a pathway to getting.
And it might not have reached its lows yet either. Real quickly, what do you see as the low for Bitcoin? I'm hearing a lot of 13,000.
I believe that. I think I've been in this
13?
space now for 10 years. What I've seen through all of these cycles is that it is impossible to say. It always goes lower than you ever think it would go. It always goes higher than you ever think it would go. And that's just a reality of operating in a nascent market.
All right, Andy Bromberg, thank you.
Thank you.